Selamat sejahtera. My name is Tarani Marimutu and my MIT number is 823B196. I will present a company overview of Scientist Berhad and Pentec Group Holding Berhad. Scientist Berhad operates in packaging and property development industry. Founded in 1968, the company has diversified from PVC manufacturing into flexible packaging and affordable housing projects. It has operation across Malaysia, Thailand and Indonesia. Pentec Group Holding Berhad operates in steel, pipes and fittings manufacturing industry. Established in 1987, the company serves sectors such as oil and gas, engineering and construction with market presence in Malaysia, Singapore and the United Kingdom. Both companies are listed on Bursa Malaysia but operate in different industries, providing an interesting comparison of financial performance and governance practices. This slide shows revenue performance from 2023 to 2025. Syntex recorded steady growth from RM 4.08 billion in 2023 to RM 4.52 billion in 2025, demonstrating strong market demand and business expansion. In contrast, Pentec's revenue declined from RM 1.04 billion to approximately RM 947 million, indicating weaker growth, momentum, and industry challenges. Overall, Syntex demonstrates stronger and more suitable revenue growth. For net profit, Syntex increased from RM 438 million in 2023 to RM 531 million in 2025, despite a slight decline in the final year. Pentec showed declining profitability over the 3 years, reflecting weaker operational performance. This indicates that Syntex maintains better profit generation and cost management compared to Pentec. Gross profit margin measures production efficiency. Syntex improved consistently from 21.81% to 23.38%, showing stronger cost control and pricing strategies. Pentec experienced fluctuation, declining in 2024 before partially recovering in 2025. Therefore, Syntex demonstrates more stable operational efficiency. Return on assets evaluates how effectively a company uses its asset to generate profit. Syntex improved in 2034 before declining slightly to 6.58% in 2025. Pentec experienced a continuous decline from 10.09% to 5.49%. This suggests that Syntex managed its asset more effectively over time. Return on equity measures return generated for shareholders. Syntex maintained relatively stable returns, remaining above 12% throughout the period. Pentec's ROE declined significantly from 14.08% to 7.13%. This shows that Syntex creates shareholder value more consistently. Syntex total assets increased substantially from RM 5.5 billion to RM 8.1 billion, reflecting aggressive expansion and investment. Pentec also recorded asset growth but a much slower pace. This indicates stronger growth opportunities and expansion strategies for Syntex. Looking at total liabilities, Syntex recorded a significant increase from RM 1.90 billion in 2023 to RM 3.68 billion in 2025. This suggests that the company utilized additional financing to support its expansion and investment activities. On the other hand, Pentec's liabilities increased on slightly from RM 324.8 million to RM 345 million. This indicates a more constructive financing strategy. Overall, Syntex appears to prioritize growth opportunities while Pentec focuses more on maintaining financial stability. This slide presents the debt to equity ratio, which measures the proportion of debt used relative to shareholders' equity. Syntex ratio increased from 0.53 to 0.84, showing a higher dependence on debt financing to support business growth. In contrast, Pentec's ratio declined from 0.40 to 0.30, indicating reduced reliance on debt and lower financial risk. Therefore, Syntex follows a more aggressive growth strategy, whereas Pentec adopts a more conservative capital structure. Syntex earning per share increased from 28.25 cent to 34.13 cent, reflecting stronger shareholders' returns. Pentec earning per share declined steadily from 14.07 cent to 9.91 cent. This demonstrates that Syntex generates stronger earnings for its shareholders. Dividend yield. Syntex maintained a stable dividend yield around 3.53%, indicating a consistent dividend policy. Pentec showed greater volatility in dividend payments over the 3 years. Overall, Syntex offers more predictable and sustainable returns to investors. Team-specific analysis. These slides present the comparison of governance disclosure item. Both companies disclose all governance elements including board composition, board committees, direct remuneration, internal control system, and governance compliance. Most disclosure categories were rated as high, while directors' remuneration was rated medium due to limited individual disclosure details. Overall, both companies comply strongly with governance requirements. Both Syntex Berhad and Pentec Group Holding Berhad demonstrate stronger corporate governance practices and high compliance with Nation Code on Corporate Governance. For board composition, Syntex stand out due to its continuous improvement in board diversity and skills disclosure, while Pentec maintains consistent and transparent reporting but with fewer enhancements over time. Regarding board committees, both companies provided detailed information on their governance structure. However, Syntex offer more comprehensive reporting and committee activities and responsibilities, indicating a higher level of transparency. For directors' remuneration, both companies disclose remuneration structure and total payments. Nevertheless, neither company provides detailed individual director remuneration breakdowns, which limits transparency and represent an opportunity for improvement. In terms of internal control system, both companies maintain robust risk management and internal audit frameworks. Syntax demonstrates stronger progression by expanding its disclosure on risk monitoring and control effectiveness over the years. Finally, both companies show strong governance compliance and adherence to MCCG principles. However, Syntax appears more proactive in continuously enhancing its governance disclosure, whereas Pentec adopts a stable compliance-focused approach. When comparing both companies, Syntex appears more progressive in governance disclosure and financial performance. Pentec maintains strong compliance but shows limited improvement over time. As a result, Syntex demonstrates greater governance maturity and stronger transparency. Syntax maintained high disclosure scores across all years. The company gradually enhanced governance explanation, risk management, reporting, and policy disclosures. This indicates continuous improvement and responsiveness to stakeholders' expectation. Pentec also maintained consistently high disclosure scores from 2023 to 2025. However, there were limited changes in reporting depth, indicating a compliance focus rather than progressive approach. The company prioritized consistency over continuous enhancement. This shows that disclosure level remains stable across all governance teams for both companies. Board composition, board committees, internal control system, and governance compliance consistently achieve high ratings, while directors' remuneration remain at a medium level. This demonstrates stable governance practice throughout the 3-year period. Several key insights were identified. First, stronger governance disclosure appears to be associated with better financial performance. Syntax achieved higher revenue growth, profitability, and operational efficiency while also providing more transparent governance reporting. This suggests that effective governance contributes to stronger business performance and investor confidence. In conclusion, Syntax demonstrates stronger reporting quality, greater transparency, and better financial performance throughout the period. Although Pentec remained compliant with governance requirements, its disclosure were less detailed and showed limited progression. Therefore, Syntax can be considered the stronger performer in both financial and governance aspects. Thank you.